Hi folks, my name is Angela Freeman. I am the enrolled agent and a partner here at Freeman CPA, and today I will be speaking with you about the new updated employee retention credit. This is an update based off of the American Rescue Plan of 2021, and it's brand new. So hopefully you will find this useful if you're a business owner with employees. So let me first start out by breaking out what is an ERC, what is the Employee Retention Credit. And basically it was enacted as part of the CARES Act of 2020 to help businesses retain employees by providing a government subsidy in the form of payroll tax credits. We sent out a blog about it back in January, so you should definitely check it out. You can find it on our website or in an email from us if you're on our mailing list. And basically in the original plan, the companies receiving PPP were not eligible. So if you got the payroll protection plan loan, which many businesses did, majority of businesses we worked with were eligible for and received this loan. So they were automatically not qualifying for the ERC, and this credit was a bit less relevant for our clients. Now, in December of 2020, a stimulus relief bill allowed businesses to qualify for the ERC even if they took out the PPP. And that basically greatly expanded the base of clients that now all of a sudden, base of businesses that could qualify for this loan, for this credit. And so one of the other changes was that the original employee retention credit was only going through the end of 2020, and the stimulus relief bill also extended it through the first 2 quarters of 2021. So there were a few changes, and I'll go over them in a minute, but basically now a lot more people qualify for this credit, and a lot more people would benefit from at least knowing about it and potentially applying it to their situation. So what were kind of the distinctions to qualify? So first off, you had to be fully or partially suspended operations due to the government shutdown order. So that would be one qualification. So if your business was ordered to shut down for a period of time, any period of time during 2020, at that time, then you would qualify for that credit. The second, if you were not fully or partially shut down and you maintained your operations, then you had to have experienced a significant decline in gross receipts or in your sales during a calendar quarter. Well, what is significant? Well, for 2020, that meant that you had to have a 50% drop in 2020 revenues compared to the same quarter of 2019. So if you're looking at, let's say your Q2 was a really bad quarter, that's when everybody was kind of shut down, and you compare that to your 2019 Q2, if you were receiving sales or revenues of 50% of the prior year or less, then you would qualify for that employee retention credit, and you can get up to $5,000 in a refundable credit per employee. There was also distinctions which part of it was refundable, but overall you would get a $5,000 credit per employee for that year, for 2020. Now, with the stimulus relief bill of December 2020, what they did is they extended, as I mentioned, to if you received the PPP loan, you could still qualify for this, and it extended it into the first 2 quarters of 2021, and they also really decreased the threshold, so made it much more applicable, much more available for a lot more businesses. And what they've basically done is they said instead of a 50% drop in revenues, if you're comparing your 2021 revenues to 2019, same quarter, all you needed to do was a 20% drop in revenue. So if you made $100 in 2019 and you made $80 in 2021 for the same quarter, then you qualified. They also increased how much you can get to $7,000 per quarter, which meant $14,000 per employee over those first 2 quarters of the 2021 tax year. So they've basically made it easier for you to qualify, and on a couple of rounds that you can have a PPP and still qualify. All you need is a 20% drop in revenues, you still qualify, and they upped it to $14,000 per employee as a refundable credit for the first 2 quarters of the year. So most recently, the American Rescue Act Plan of 2021 further extended this credit and enhanced the rules even more, made it even more applicable to many small businesses tax situations. So a lot more businesses can now benefit from this. So what's new for this year? The new section 3134 extends COVID-19 employee retention credit for the rest of 2021. So you no longer have just the first 2 quarters. You've added Q3 and Q4 to this availability with some modifications, which are generally beneficial. So even better than the first 2 quarters. So the new rules for recovery starter business are basically, if you have a startup business, this is brand new and sounds really great for a lot of businesses that were not in existence when COVID first hit or prior to that. So if you began your business after February 15th of 2020, and you're small, so your average gross receipts or your sales are under $1 million per year, you can qualify for up to $50,000 per quarter for Q3 and Q4 in credits. So you're getting $7,000 per employee per quarter, and depending how many employees you have, it's up to $50,000 total credit per quarter. So in the last 2 quarters, if you have enough employees, you can get $100,000 as a refundable credit to you. And basically that covers 70% of the wages. So it's a pretty large chunk of your business expenses. And this, basically the really cool part is that this applies to businesses that did not meet the suspended operations or the gross receipts test. So you didn't have to have a government shutdown order. You didn't have to have a drop in revenues. All you needed to do is basically just be a brand new business. You started up despite COVID, and you didn't meet any of the other tests. You have employees, and you can now basically get this credit that's refundable to help you stay in business and keep employing employees. The whole point is to allow businesses to continue with their employees and not have to lay them off. And there's one more business category that was added, and that's a severely financially distressed employer. And so that one is harder to qualify for, because if you're a severely financially distressed employer, it's an employer of any size that experienced a 90% decline in revenues compared to 2019. So if you had a really big drop in revenues and you're really struggling, then you qualify for this credit as well. And what that extends is it, instead of picking out which wages qualify and certain things, let's say there's a PPP forgiveness in place, now you can treat all wages as qualified for this credit. So it extends how much money you can receive as a credit if you are severely financially distressed employers. So that's, again, designed to help you stay in business, designed to help you retain your employees. So this is kind of just the quick overview of the employee retention credit. And as you can see, it really enhances businesses' ability to retain employees by providing pretty large financial compensation for you retaining your employees. We hope you find it useful. Here at Freeman CPA, your success is our success, and always, every day. And if you have any questions, we welcome your comments. If you like this content, please subscribe. We would love to have you see our regular updates on important tax topics. And always reach out to us. We love our clients. Thank you.